We know what has happened, but what's the why? What are you noticing in the market that's different?
Sure. I mean, obviously, we've talked enough about the epic short squeeze and the coordination of retail being the catalyst. Now, we're obviously focusing on the options, and now the options might have exacerbated the moves that we've been seeing as retail call volume typically chases the momentum. But we don't think it's been the catalyst, and I think that might surprise some people and differ from what we're reading in a lot of articles and seeing out there. And the main reason we're saying that is if you look at the GME call open interest or the open call position, that really has not increased much since the beginning of the year, back when stock was $13. Total call open interest basically flat this year, and then somewhat under the radar, in my opinion, total put open interest is up almost 3x. So this whole situation's been classified as retail versus institutional. I think that's just another data point that shows these retail message board traders are typically opening and closing those trades in the same day, which doesn't increase open positions. Meanwhile, recently it does appear that although the short squeeze has forced a lot of shorts out, you do see put open interest up almost 3 times this over the course of this year, which may be a clue that we're seeing shorts swapping into long puts to continue this to wage this war.
Is it possible also that those that have been shorting some of these stocks have decided, in order to manage risk, they will use puts rather than straightforward shorts?
Yeah, I mean, the beauty of a put option is that you have a quantifiable max loss. Now, these puts are incredibly expensive right now with how high volatility is. Plus, they're also pricing in the short interest in the name. But yes, if you have a choice between an expensive vehicle with a quantifiable loss or shorting the stock with, in theory, an infinite potential loss, you're going to start to move towards the first one as things start to get crazy like they are right now.
What we're seeing at the same time as a rally in like the AMCs and GameStop, so the world is a broad sell-off in the equity market at broad indices here and over in Europe. On a very base level, like, are guys selling long here to again help cover shorts or put up more collateral?
That's definitely the narrative that's out there, and I certainly think that makes some sense. I mean, also just from a broader stock market health viewpoint, if you're seeing some of these unprecedented things happen, you might think, well, we've been looking for different signs of excess froth and reasons for markets to sell off, whether it's, volatility moving up with stocks at the same time or other kind of indicators. And if you're seeing something like this, you might say, maybe you want to lighten up just a little bit, let this whole thing play out, because odds are, GME's probably not going to go up $100 every day for forever. So you would think it would end at some point.
Does this migrate from penny stocks into large caps? Can it migrate from penny stocks into large caps?
What's interesting is we saw a very similar retail presence this summer. We were highlighting in August, all the large cap names, all the retail interest, the surge in call volumes, things like that. The difference is the mega cap stocks, the introduction of retail call buying and whatnot, is not really having that much of an impact. It doesn't really have as much of an impact on the Titanic versus what it does on a small cap stock with high open interest. So I think that we already saw retail migrate out of the large caps into this, and we could certainly see them migrate back when this does potentially end.
So you mentioned the potentially end. Those that were around in 2000 are warning of the speculation, the bubbles. The story used to be the whole pump and dump scheme, like you talk up a stock, you put out a fake report, you buy the stock, then you sell it when it pops. This is a little bit different because this is just taking advantage of a structural quirk in the market. How do we go on from that?
Well, I agree. I mean, I think that it is certainly different this time. Whether retail has always been around, but there's much easier access to markets. There is low cost or no cost trading, and there's much more coordinated access to information. So it is completely different this time. And in terms of when does this end or what marks the top, it's impossible to say. Over the last couple of days, we have been looking at, you had 6 straight weeks where call volume in GME outpaced put volume every single day for 6 weeks. Just in the last couple of days, we've seen put volume outpacing call volume fairly significantly. So if you're looking for a potential sign, that's at least one that we're looking at. So far, has not been the case, but I think that's one to keep an eye on.